Hi everyone, welcome to this time's Growling Finance. Well, China's annual two session began last Wednesday in Great Hall of the People in Beijing with the opening of the third session of the 14th National People's Congress and the third session of the 14th National Committee of the Chinese People's Political Consultative Conference. The meeting released a lot of useful information and gave a clear sign of the next stage of bonds market. So was it a good sign or bad sign? What is the orientation of bonds market in next stage? Is the downward trend of bonds market reversed? And what is the most proper investment strategy now? Well, follow me. Let me tell you this time's story. For fundamentals, the contents of two sessions were mainly about two parts. First, the accomplishments of 2024, which was that our country got its GDP increased 5% year-on-year last year, ranking among the world's fastest growing major economies, and continue to contribute about 30% to global economic growth. Second, the meeting set a bunch of economic goals of 2025, which included that the targets economic growth of around 5% in 2025, deficit to GDP ratio at around 4% for 2025, targets CPI growth of around 2% in 2025, and issue more ultra-long special treasury bonds and local government special purpose bonds in 2025. Meanwhile, China to leverage monetary policy instruments to provide stronger support for property stock markets, cut required reserve ratios, interest rates when appropriate in 2025. After the meeting, the economic theme press conference was held on Thursday. The governor of the PBOC stated the basic characteristics of the monetary policy. First, in terms of moderately loose monetary policy, which is more like a statement towards the state of the monetary policy than a must-go way of the policy to the next step. Second, the monetary policy has enough space through a quantitative view. At the present, the average IRR of financial institution is 6.6%, which is still room for downward trend. Third, there is still room in structural monetary policy tools that the PBOC provides to commercial banks. Market investors, however, focused on words such as enough room for cutting IRR and using other structural monetary policy tools, and translated to there will be a IRR cut and other structural monetary policy interest rate cut instead of OMO, MLF kind of policy interest rate cut, which was a very bad signal for bonds market. Furthermore, the PBOC will reinforce the regulatory to irrational actions that disturb the policy run. After this bad news, bonds market have experienced a huge adjustment. Total bond yield curve increased more than 3 basis points. In terms of funding condition, which was loose last week, the PBOC took care of liquidity during two sessions. The financing price was around 1.8%, but the action could be temporary according to some surveys. The funding condition may tighten again when the two sessions is over. The purpose of tight funding condition of the PBOC hasn't changed. The confidence of a losing funding condition has been reversed since several weeks ago. So uncertainties will cover the funding condition for the next few weeks. For bond investment strategies, the long-term end perhaps doesn't reach its highest point, so we would better to avoid it. The short-term end now is under the valuable territory to invest. The steepened bond yield curve strategy is still functional, and maybe patience is the most needed in this period of time. So, as always, if you want to know more useful finance information about the Chinese bond market and the economic situation, please like, share, and subscribe. I will always be here, share my understanding and experience, and waiting for you. So bye guys, until next time.